Everyone wants to know, what's the best investment? Ryan, the real estate investor, says the old school stability of real estate is better. While Evan, the real estate investor, says modern low-cost ETFs are the real path to get rich. That's why I want to know, which investment puts more money in your pocket? We're diving deep into the pros and cons of each investment so you can confidently choose which one is better to build the life that you've always dreamed of. Ryan promises them with real estate, Evan with ETFs, but who can truly deliver and win the fight? Evan says the first benefit of ETFs is that they are extremely easy. And that's probably the biggest factor why they have become one of the most popular investments out there. You can buy ETFs with any broker on your phone or computer. The best ones in Germany are in the calculator on our website that is linked down in the description. And with more than 10,000 ETFs available, you can invest in anything you want. And the best of all, you can buy ETFs at the fair price because ETFs trade at their net asset value. With other investments, like Ryan's real estate for example, it can be extremely difficult to determine the fair price. But ETFs, as easy and as transparent as it gets. Evan says that ETFs are also superior to real estate because they are flexible and liquid. Can Ryan sell his properties like this if he wants? No, it takes quite some time to find a buyer, go to the notary and close the deal. Can Evan sell his ETFs whenever he wants? Generally yes. As long as the market is open, he can buy or sell whatever he wants, but at the current market price. And every once in a while some crazy shit like COVID happens and the stock market loses like 35% in less than 4 weeks. Have fun selling your ETFs at a loss when the world is going ham. You guys love passive income. Almost 5,000 of you watched our latest video, thank you for that by the way, and Ryan loves passive income too. But you know what he likes even more? Tax-free passive income. It's not easy to do, but it's possible, but only with real estate. And here's how. When you make any kind of income, you have to pay taxes here in Germany, generally speaking. But with real estate, you can declare your taxable costs, your mortgage interest, depreciation, insurance, property management, and a lot more. So the rent you collect might cover your mortgage and other expenses, giving you a positive cash flow in the real world, but because of tax-deductible costs, your taxable income could be negative. And that means you're making money in reality without paying taxes. And we're just considering passive income here. Ryan could make even more money when selling his property at a higher price than he bought it for. And if you want to know if tax-free passive income can work for you as well, you can book a free meeting with us right here. And Ryan loves real estate because he can save even more taxes. Not just while holding the property, but also when selling it. There's only one condition. You have to hold the property for at least 10 years to sell it tax-free. Take that, Evan, with your 25% capital gains taxes. So now it's 2-2 between our two investors. Let's see if Evan can increase the tax efficiency of his ETFs as well. He can! The first 1,000 euro in investment profits will be tax-free because of his Freistellungsauftrag. 1,000 euro a year is nice, but in the grand scheme of things, it's not a lot of money. And everything above that will be taxed with 25% capital gains taxes. So, instead of putting his ETFs in a broker, Evan can put his ETF in a pension to save taxes. The German pension system consists of 3 different levels. The first level gives you tax benefits when investing. So for every 100 euro you invest in ETFs, you can get 42 euro back when filing your taxes. Level 2 is not right for Evan because he cannot invest all his money in ETFs like he can in the other 2 levels. And level 3 gives you tax benefits when withdrawing your money. So at some point or another, you will always get tax benefits with ETFs and pensions. You can book a free meeting with us with the link in the comments to learn more about that, or watch our pension playlist right here. The more tax benefits you get, the higher your return. And the more leverage you take, the higher your return as well. Ryan knows that, and that's why he leverages his real estate investments with mortgages. Real estate is really the only investment that allows you to invest with other people's money to build wealth. And you can decide if you want to focus on cash flow when investing in real estate, then make a down payment, or if you want to maximize your return and leverage, then get a 100% mortgage from the bank if you can. Because if you want to get a 100% mortgage, the bank must really like your financial situation and the property you want to buy. Why do you get a mortgage for real estate and not for ETFs or any other investment? Because real estate is Betongold here in Germany. As long as you have a mortgage, the bank will have the first rank in the land registry, acting as their security, and that's why mortgage rates are one of the cheapest loans that you can get. That's why Ryan is smiling all the way from the bank when he gets a mortgage for 3 or 4%. Tax deductible, of course, as a real estate investor. And Evan is smiling because he doesn't even need a bank, because he can start investing in ETFs with basically no money. You can start monthly savings plans with literally 1 single euro, all while Ryan needs thousands of euros for the closing costs of his properties alone. And we're not even talking about a down payment here. Evan has nothing of this. No initial investment, no trading fees. The only thing he has to pay is the TER of his ETFs. And taxes, of course. But we talked earlier about how Evan can avoid taxes when investing in ETFs. So is real estate as cheap and as passive as ETFs? No. But Ryan has a lot more control over his properties than Evan does over his ETFs. And that's what he likes. If Evan's ETFs go south, what can he do about it? Nothing. You can't even do anything if a single stock goes south, let alone an entire ETF. Tesla lost 35% over the last month. What do you or me want to do about it? The only thing we can do is to sell. That's usually a pretty bad option, especially after the drop. Real estate is different. When you own a property, you have direct control over your investment and there is no management board or algorithm deciding for you. You decide how to manage your property. And if you want to invest in improvements to increase the value of your property and the rental income, go ahead. The only thing that can fuck you up pretty good is a tenant that ruins your property. But even then, it's not the end of the world. We're working behind the scenes on a video to show you that you can make something out of every property, even if there's black mold everywhere, like here. And because of this cluster risk with real estate, Evan likes his ETFs because they give him instant diversification. And because Evan watches our videos, he knows what I'm saying all the time. Diversification is key to investment success. And that's why I'm happy both Evan and Ryan learned something from the other person today. And now Evan diversifies with real estate and Ryan with ETFs. And if you want to know how you can get rich by diversifying your investments, this is the perfect video for you right here.